Okay, let's get back to those AI stocks. There's plenty of noise on the geopolitical front, but our guest says you should keep focus on the AI trade, and he's broadly bullish on the equity markets this year. We're joined by Justin Elliott, portfolio manager at Caldwell Investment Management. Justin, thanks very much indeed for joining us.
Thanks for having me on.
You see enough evidence of growth in the demand for AI in the AI market to stay broadly bullish. For example, you say that companies using these chips say one of the big constraints is they still can't get enough of them.
Yeah, that's correct. Obviously, the sort of AI bubble narrative is front and center for a lot of investors. And there's a lot of concern regarding, the rising CapEx intensity and the return on that CapEx spend. But we do align with the AI bull narrative, and our optimism for that sort of continued spending and acceleration and growth in the industry is backed by a few points. So the first would be, that existential risk still remains. And the most recent demonstration of that was ChatGPT's Code Red when Google's Gemini 3 came out. And so, spending needs to be maintained to, hold your leadership position at the front of the frontier, basically. The second would be, bottlenecks to the point that you brought up. And that's on both the LLM provider side and the hyperscaler side. So for LLM providers, some of the leaders, such as ChatGPT, have spoken to, throttling product releases and not being able to release what they like just due to the lack of GPUs. Sam Altman has said that they could potentially double revenue if they had access to more GPUs. On the hyperscaler side, we've heard things within Google, for example, of internal departments competing for access to GPUs. Obviously, the researchers building the models want more access, and the product teams building the product, sales teams want that to generate revenue. The last thing would be that, we see more capable models should equal more useful agents, and that will drive up enterprise and consumer use cases. So three really key points why we're still kind of bullish on this trade heading into the new year.
Right on topic, Alphabet is one of your stock picks here, a massive buyer of these GPU chips, graphical processing unit chips that have the power to handle all these AI computations. So Google's had such a run, but you see more upside.
Yeah, Google is basically the only AI player with a full vertical stack. So they've got, the frontier model that they own and that they develop, and they've got their own kind of custom hardware at scale. And they've got some of the best distribution as well. That's really a huge advantage across all of Google's products. And so we see basically them leveraging that advantage to drive, lower costs for AI. And that's going to entice customers to switch from other cloud providers over to Google to improve their own return on invested capital for using AI. And we think that helps or should help generate, accelerating growth in Google's cloud division into the new year. And, they'll take share most likely from the others, Amazon and Microsoft. The second is just as that business scales up, obviously the margins have improved. And so as Google keeps releasing new generations of models, new generations of chips that, try to boost that efficiency, that should translate into continued margin improvement. And the last would be just them integrating these AI benefits really into their core search business. So on Google Search, AI can lead to people staying on the page longer and converting at higher rates as well. So that allows them to, charge more for the ads because they're more effective, and that should drive continued growth in their search business.
You have another tech adjacent idea here, Huron Consulting, HURN on NASDAQ. Just remind us what they do, please.
Yeah, they're a consultant based in the U.S. They're primarily focused on education and healthcare markets. And they're basically exposed to a lot of U.S. government customers, government adjacent customers. One big sort of secular tailwind for them is obviously the changing regulatory environment in the United States. And the passage of the, big, beautiful bill last year put a lot of pressure on both healthcare markets and education markets. So hospitals, for example, have a fresh sense of urgency to really improve their operations, to modernize and to try and use AI, for example, to really improve their revenues, improve their cost base. And it's a similar dynamic on the education front. And so we think there's, really strong demand for their services. And given the urgency, you've actually seen an increase in the size of engagements over the last couple of quarters. And we think that's really promising for the future outlook as that becomes more pressing and companies really rush to optimize their operations.
And finally, Interdigital, IDCC, and this is a big holder of intellectual property and technology?
Yes, that's correct. So they are a developer of patents that are used in a lot of the standard technologies that we sort of take for granted every day. So 4G, 5G, what will be 6G on phones, Wi-Fi settings, even video codecs. So that helps basically compress file sizes for streaming. What we see as really a major upcoming catalyst is litigation with Disney over streaming services. And basically, all the streamers have been using their patents without properly compensating IDCC. Courts have been more recently ruling in IDCC's favor, and we think that helps push the negotiations along and should set up a deal for Disney and IDCC, which will be precedent for all other streamers to do a deal with IDCC. And, net benefit of that is basically just driving higher sort of recurring revenue for the company. And it's at very high margins as well, because there's very low cost to, add another licensing deal basically to your base. And so, we see continued margin expansion from that growth. And a lot of that is very durable and stable growth. So we like the company. It's relatively underfollowed, and it's, got a great outlook in our opinion.
Justin, thanks very much indeed.
Thanks for having me on.
Justin Elliott, Portfolio Manager at Caldwell Investment Management.